Hello everyone, welcome to EduTap and welcome to today's marathon session. So for your RBI Grade B 2025 Phase 2, this is the marathon session for your RBI notifications and RBI press releases. Okay, in today's session, we are going to focus on the November RBI notifications, RBI press releases, as well as the important RBI notifications, RBI press releases of October also, as well as we are also going to discuss some of the important finance current affairs. Okay, so as you know that I have not taken the finance 360-degree session, but in today's session, in the marathon session, I have brought the important topics for your coverage before the phase 2, so that in the examination you are more confident about your coverage. Okay, so I hope I'm clearly audible and visible. Give me a thumbs up if everything is fine, and let's get started. I hope you have covered the November RBI notifications, press releases very good, and in today's session you will get to know that how well you have covered them. Okay, so let's get started, but before that, do subscribe to the YouTube channel of EduTap, as well as do join our Telegram channel, in which you will get the PDF of the session. Okay, so you will get the PDF of the session in the Telegram channel. Okay, now let's get started with today's session, and with the first question. The first question is in front of you. This is a direct question, a easy question. So try to answer this question. So following a comprehensive review of governance concerns and in continuation of earlier actions taken in 2023 and 2024, the RBI has decided to further extend the period of supersession of the Board of Directors beyond November 23, 2025. So Prakash Pathak will continue as the administrator during this extended period. So for which particular bank, for which particular cooperative bank, the supersession has been done by the RBI. Okay, so RBI has superseded the board of directors of which particular cooperative bank. So I hope you will be able to answer this question. So try to answer this. So here, see, is it Saraswat Cooperative Bank, Abhyuday Cooperative Bank, Punjab and Maharashtra Cooperative Bank, Bharat Cooperative Bank, or Cosmos Cooperative Bank or Cosmos Bank? So basically it is Abhyuday Cooperative Bank Limited. This was quite in news recently, and that's why I've brought this question. Okay, in this session we will also discuss the paragraph based question, like it comes in phase 2. In phase 2 there are also paragraph based questions, so we will discuss the paragraph based question also, and some simple direct questions also. Okay, so this is the answer, Abhyuday Cooperative Bank Limited. So here you can see the press release was released by the RBI recently, as it was said that there is the extension of period. The RBI is going to supersede the board of directors of the Abhyuday Cooperative Bank for a longer period of time. Okay, and the further period of 1 year. For further period of 1 year, the supersession is going to happen of the board of directors of the Abhyuday Cooperative Bank by the Reserve Bank of India. Okay, and Satya Prakash Pathak shall continue as the administrator of the bank for this time period of supersession. Now going forward with this next question, and the question is about the Reserve Bank of India's Payments Vision 2025 built on the theme e-payments. So as you know that the Payment Vision 2025, see, this was not directly in news, or this was not directly in notification, but this was mentioned in another notification, and that's why I have brought a question on this, because this topic is important. It was not directly there in news, but this was mentioned in one of the notifications. Okay, so RBI's Payment Vision 2025 built on the theme. The theme for the Payment Vision 2025 is e-payments for everyone, everywhere, every time. This theme outlines the initiatives across 5 anchor goalposts. So basically under the Payment Vision 2025, there are 5 goalposts, and under the 5 goalposts there are the steps that the RBI is taking, okay, or the RBI has announced. So what are these 5 goalposts, and which of the following is not one of these 5 goalposts that you have to tell? So integrity is one of the goalposts, inclusion, innovation, institutionalization, they all are the goalpost. Industrialization is not one of the goalposts. Instead of industrialization, there is internationalization. Okay, so e-payments, we are focusing on the internationalization of e-payments. So the 5 goalposts are integrity, inclusion, innovation, institutionalization, and internationalization. Okay, so this is the idea. So remember that e-payments, the theme of the Payment Vision 2025 is very important. It is e-payments for everyone, everywhere, every time. So 4 E's: e-payments for everyone, everywhere, every time. And the 5 goalposts are integrity, inclusion, innovation, institutionalization, and internationalization. Okay, so under these goalposts there are specific initiatives that have been mentioned. Now coming to the next question. So which book has been selected by the Reserve Bank of India under the scheme for writing books originally in Hindi on economics, banking or financial subjects? So basically there is a scheme under which RBI announces that okay, the RBI is going to invite the books, or the RBI is going to reward the books. Okay, so which book has been selected by the RBI or has been rewarded by the RBI recently? So the book Krishi with Evam Sehkarita. So this is the book that has been recently rewarded. Okay. So basically here you can see that Reserve Bank had invited entries under this scheme. On the evaluation of the entries received, it has been decided to award or to reward Dr. Keshav Prasad Saras, retired associate professor, and he has written the book, or his book is there, Krishi with Evam Sehkarita. So this is the idea. So remember the name of the book as well as remember that who has written the book basically. If a single question comes from the finance current affairs from the RBI notification, such a question can come. Okay. Now coming to the paragraph based question. So now first read the paragraph carefully and then try to answer this question. Okay. So let's see if you are able to answer this question. So first of all, the RBI publishes half-yearly reports. RBI publishes half-yearly reports on management of foreign exchange reserves as part of its effort. So recently, the RBI has released the 45th half-yearly report on management of foreign exchange reserves, and in this 45th report that is recently released, in this the data is released for the foreign exchange reserves, the amount of the foreign exchange reserves with the RBI and such. Okay, so at the end of June 2025, the foreign exchange reserves cover of imports stood at dash months. So basically the reserves, the foreign exchange reserves, they are sufficient to cover the imports for how many months, that you have to tell me. So here the answer should be, it is 11.4 months. Okay, so here the answer is 11.4 months. So at the end of June 2025, the foreign exchange reserves cover of imports stood at 11.4 months. Now at end September 2025, the Reserve Bank held 880.18 metric tons of gold, of which 575.82 metric tons were held domestically, while 290.37 metric tons of gold were kept in safe custody with which of the following institution? IMF and World Bank, or Bank of England and Bank for International Settlements, or Asian Development Bank, European Central Bank, Federal Reserve Bank and Bank of Canada, or New Development Bank and African Development Bank, as well as 13.99 metric tons were held in the form of what? Was it held in the form of bullion deposits, gold deposits, reserve bullion, metal certificates, or gold-backed assets? So what do you think the answer is here? Okay. So here the answer is B, that is Bank of England and Bank for International Settlement. Okay. So basically out of the 880.18 metric tons of gold, maximum was kept domestically, but 290.37 metric tons of gold were kept in safe custody with the Bank of England and Bank for International Settlements, while 13.99 metric tons of the gold was kept in the gold deposits. Okay. So B is the answer here. Next is, as at the end September 2025, how much had the Reserve Bank of India invested in bonds issued by the IIFC UK? So India Infrastructure Finance Company Limited. So till now, how much has been invested, that you have to tell me. Okay. So till now, $400 million have been invested. So keep this in mind. Okay. So basically, what is the news article, or what is the RBI notification, RBI press release all about? So 45th half-yearly report has been released by the Reserve Bank of India. RBI has been releasing such kind of report, half-yearly report, since February 2004. Okay, it may be recalled that in February 2004, the RBI initiated the practice of compiling half-yearly reports on the management of foreign exchange reserves. The RBI has notified that during April to September 2025, India's foreign exchange reserves increased from US $668.33 billion to US $700 billion. So we have crossed the 700 billion mark, we can say. Okay, so in the foreign currency, in the foreign exchange reserves, in the reserves, the RBI is holding the foreign currency asset, that is foreign currency RBI is holding. RBI is holding the US dollar, the euro, pound sterling, Japanese yen, and the other foreign currencies. Okay, so maximum in the foreign exchange reserves, out of the $700 billion, the maximum is the foreign currency asset. With the foreign currency asset, the RBI also hold the gold. Okay, the RBI also hold the gold. With that, there is also the special drawing rights, that is known as SDRs. They are, see, India being a member of IMF, India is providing a quota to the IMF, and IMF provides the SDRs. IMF allocates the SDRs, the special drawing rights, to the member countries on the measure of how much quota the country is providing. The SDRs are provided to the member countries. Okay, so these are the SDRs. SDR is not a currency. SDRs, the value of SDR depends upon the value of 5 currencies, that is dollar, pound sterling, euro, Japanese yen, Chinese renminbi. Okay, so SDR, its value depend upon the currencies. Now, reserve tranche position in IMF. So basically, if India is providing the quota, a part of the quota is providing in the foreign currencies, a part of that foreign currency is the reserve tranche position of India with the IMF. Okay, so these are the parts of the foreign exchange reserves that you must have covered in the static part. Okay, so in the foreign exchange reserves, there is foreign currency asset, that is foreign currency. In the major currencies, gold, special drawing right, reserve tranche position, all of this comes under the foreign exchange reserves, and total foreign exchange reserves of India has increased to $700 billion. This is the idea. Next is the sources of accretion of foreign exchange reserves. So basically, on the balance of payment basis, the foreign exchange reserves increased by $4.5 billion. So because of the balance of payment, the foreign exchange reserves increased by $4.5 billion. The valuation gain, because of the increase in the value of gold, the foreign exchange reserves increased by $25.3 billion. Okay, because of the increase in gold value, the foreign exchange reserves increased by $25.3 billion. So this is the idea. So the rest you can read once the data is given. Here you can see at the end of June 2025, foreign exchange reserves cover of imports stood at 11.4 months. Okay, the rest is just data points. Here the important point is that the shark swap arrangement, India had announced that we are going to allow the shark countries, we are going to allow the shark countries to get dollars or euro or to get the rupees from India on the swap arrangement, that right now they can take if they require, because of the crisis, because of financial crisis, economic crisis, because of any of the crisis that the shark countries are facing. If they require, they can take the dollars, euro or rupees from India till a amount. They can take the money from India, giving their own currency. So let's say Nepal is giving its own currency. Nepal is giving its domestic currency to India, and India can provide rupees to Nepal. Okay, this is and after a time period, after let's say 2 months, 3 months, after 6 months, Nepal will return the rupees to India, and India will return the domestic currency of Nepal to Nepal. But Nepal will give some additional amount to India because India is providing this facility. Okay, so this is swap arrangement that is provided to shark countries by India. So till now, the Royal Monetary Authority of Bhutan and Maldives Monetary Authority, they have taken this facility from India. This is the idea. Now, RBI has the mandate to invest up to RBI has the mandate to invest up to $5 billion in the bonds issued by the India Infrastructure Finance Company Limited. As at the end of September 2025, the amount invested in such bonds by RBI stood at $400 million. So basically, RBI has the mandate to invest $5 billion in this, but RBI has till now invested $400 million. Okay, so this is the idea. These are the important points that you have to remember from the 45th half yearly report. Okay, now coming to the next point and the next question. I hope you know this. Try to answer this question. Which organization has recently been recognized by the Reserve Bank of India as a self-regulatory organization for payment system operators? So basically, the RBI has released this RBI press release stating that there is a selection that has happened of a self-regulatory organization for the payment system operators. Okay, so this SRO will connect the payment system operators, will be the connecting point, will be the linkage between the payment system operators and the Reserve Bank of India. So which of these entities have been selected as a SRO for the payment system operators? So anyone who knows the answer, is it NPCI or Payment System Council of India or Self-Regulated PSO Association or Indian Banks Association or Fintech Regulatory Forum? So here the answer is Self-Regulated PSO Association. Okay, so this is the answer. Here you can see directly the press release was released by the Reserve Bank of India stating that application was received from self-regulatory PSO association seeking to serve as the SRO for PSOs, and the application has been duly considered and it has been decided to recognize the self-regulatory PSO regulation as the SRO for the PSOs. Okay, so basically SRO shall be set up. This SRO for the PSO, for the payment system operators, the SRO shall be set up as a not-for-profit company under the Companies Act 2013. Only regulated payment system entities such as the banks or non-bank PSOs can be members of an SRO. Okay. Next, now coming to the next question. Now this question again is a paragraph based question. A small paragraph has been given to you. So you have to identify that the topic is about what. Okay, so RBI has introduced a series of, see what has happened recently because of the decisions that has been taken by Trump. So what has happened recently, that because of the decisions that have been taken by Trump or because of the global situation, the trade is slowing down, the exports are slowing down from our country. Okay, there is the slow down of the exports from India. So RBI has introduced a series of trade related relief measures to cushion the exporters, to help the exporters from the adverse impact from the negative impact of global disruptions. These measures, there are relief measures that have been taken for the exporters. So these measures are directed at easing the regulatory timelines, supporting the liquidity for the exporters, providing them enough of the credit or providing them the more timeline to return the credit, providing operational flexibility in export related transactions because of the adverse impact of global disruptions. Help is being provided, relief measures are being provided for the exporters. The relief extends across the FEMA regulations and loan related relaxations have been provided, aiming to address the challenges faced by the sector. Okay, now what is the timeline, what is the new timeline for realization and repatriation of the full value of goods, software and services exported from India? So basically, if we are exporting the product, if we are selling the product outside, if the exporters of our country are selling the product outside, they get the money. So within how much timeline, what is the new timeline for realizing the money, for getting the money, for repatriation of the money in India? Okay, very good. Good to see that you have started the answering. So yes, 15 months from the date of export. So basically, previously, realization and repatriation of full export value of goods, software, services exported from India from 9 months. So previously, 9 months was the timeline in which the full repatriation, the full payment has to come back or the full realization of money has to come back. Okay, but now it has been said that the exporters will get 15 months to take the money for the realization and repatriation of the full value or the full amount of money. Okay, so 15 months from the date of export. Next is the period allowed for shipment of goods has been increased. What is the new maximum time period from the date of receipt of advance payment or as per agreement, whichever is later? So what is the new maximum time period in which the shipment has to happen of the goods, from the date of advance payment or as per the agreement? So what is the new maximum time period? So it is 3 years. So the new maximum time period is 3 years now. Previously, the time period was 1 year. Now the time period has been extended to 3 years. So increase in the time period for shipment of goods from 1 year. So timeline has been increased from 1 year to 3 years from the date of receipt of advance payment or as per agreement. Okay. So yes, very good. 3 years. 3 years you have to remember. Okay. Next is under the RBI Trade Relief Measures Directions 2025. What is the enhanced maximum credit period allowed for pre-shipment and post-shipment export credit disbursed till March 31st, 2026. So what is the enhanced, what is the increased maximum credit period? Maximum credit period, that is the period for which the credit is given, for which the loan is given for pre-shipment or post-shipment export credit. Okay, so before the shipment or after the shipment, the export credit that is given, the loan that is given, what is the maximum time period for that loan now? So now the maximum time period is 450 days. Okay, now the maximum time period is 450 days. So here you can see this is the update that has happened or trade relief measures that have been taken. Extension in the time period for realization and repatriation of full export value has been increased from 9 months to 15 months. So now 15 months the exporters have to get their money to repatriate their money back to India. Okay, to take the money from the importers. Increase in the time period for shipment of goods from 1 year to 3 years. So now 3 years long time period is given for shipment of the goods. Moratorium on or deferment. That means if the loan has been taken, let's say a term loan has been taken by an exporter. Term loan means for a time period. Okay, the loan has been taken by a exporter. So term loan has been taken by the exporter. If the exporter requires, the moratorium can be given. That means a timeline can be given, extended timeline can be given to the exporter, okay, or the timeline can be given to the exporter in which the exporter do not have to pay the principal amount. So moratorium period or deferment of payment of all loan or term loans and recovery of interest on working capital loans falling due between. So between this time period, there is moratorium period that is going to be provided to the exporters as per the requirement, okay. Permission to lenders to recalculate drawing power in working capital facilities. So sometimes the exporters, they get the working capital facility. That means they get the credit for working capital. They get the revolving credit, or they get the continuous credit for their working capital, for their capital requirement, okay. Now it has been said that drawing power, because of the recent turmoil that is coming, or recent problem that is being faced by the exporters because of the global scenario, so the drawing power or the money that can be received by the exporters from the banks is reducing, because the exporters are in stress. So their drawing power is reducing. Now to increase the drawing power of the exporters, or to provide the exporters with the credit, it has been said by the RBI that the banks can reduce the margins or basis reassessment, or reassessment can be done of the exporters with easier terms and conditions, so that the exporters can get more money and their drawing power can increase for the working capital loans, okay. So this is the basic idea, that there is the permission to lenders, permission to the banks, to the lenders to recalculate the drawing power of the exporters for their working capital requirement. Either by reducing the margins, the banks can reduce their own margins, or they can do the reassessment with easier terms and condition during the above moratorium period, deferment period, or during the period, okay. Relaxation in the repayment of export credit. So enhancement in maximum credit period. As I've told you that the maximum credit period has been increased from 1 year to 450 days for pre-shipment and post-shipment export credit disbursed till March 31st, 2026. So for the credit that is disbursed till March 31st, 2026, till then, the maximum credit period has been extended from 1 year to 450 days. Allowing lenders have been allowed to liquidate packing credit facilities availed by exporters on or before August 31st, 2025, where dispatch of goods could not take place. So in this case, where the dispatch of goods could not happen, shipment could not happen, so liquidation can take place. The credit facilities can be liquidated by selling the assets. So this is the idea, okay. Now, from any legitimate alternate sources, basically, the loan can be taken care of, or loan can be removed. Moratorium or deferment not treated as restructuring. If a timeline has been provided to the exporters in which they do not have to pay the principal amount, or if deferment of payment is happening, if delay is happening in the payment, in this case, this will not be considered restructuring. This will not come under the NPA, non-performing asset, okay, because this is the facility provided by the RBI or announced by the RBI. Post moratorium classification, after the moratorium, after the time period has been finished, after this time period has been finished, then if delay is happening in the payment, then the non-performing asset can be considered, okay. Reporting to credit information companies. So credit information companies have to be informed clearly, okay. Next is mandatory. Now trade relief measures have been taken, as well as there is the Trade Relief Measures Directions 2025 that has been released, in which this has been elaborated more, and there are some additional points that have been given. That is, for there is general provision that has to be kept for eligible borrower accounts that were standard as on August 31st, 2025, but had some default now because of the stress that is coming from the global disruptions. If there is some default that is coming, they are granted relief under these directions. So they are granted relief, but the regulated entities, the banks, the NBFCs, they must create a general provision of minimum 5% of the total outstanding in such accounts. They will be considered standard. They will be still considered standard. They will still be considered good loans. They will still be considered fine loans. They will not come under the non-performing asset category, even if there is some default that is happening, even if there is some stress that is coming. That is because of the global conditions. Okay, the exporters have no role in that. The stress is because of the global conditions. In that case, these loans will still be considered standard. They will not be considered non-performing asset, but the banks have to maintain a general provision of minimum 5% on these kind of loans till 31st December 2025. Okay. Now this is the basic idea, as well as it has been said that the regulated entities must submit fortnightly reports as on 15th of every month. Okay. as on fortnightly reports, basically 15th of every month, okay, and as on last day of every month. So 15th of every month and last day of every month. Reporting format will be provided by RBI on the Daksh platform. Interest treatment, now moratorium period has been provided, the time period in which the principal amount has not to be given, but interest will continue to accrue, but only simple interest with no compounding and no interest on interest during this moratorium period. So there is a benefit that the exporters are getting, that you can see, okay. Now coming to the next part, now coming to the next question, try to answer this question, okay. So financial sector assessment program, this is a joint program of the IMF and the World Bank undertakes. So this is a joint program of the IMF and the World Bank undertakes a comprehensive in-depth analysis of countries' financial sector. If you remember the FSSC report, see, there was a recent report that was published by the IMF. IMF had already released the India FSSA report on their website on February 28, 2025. Okay, and we discussed this report also, that IMF has released a report regarding the financial situation in India, Now the World Bank has released the India FSA report, that is the financial sector assessment report has been released by the World Bank on their website on October 30, 2025, which was announced in November in the RBI website, okay. So this is the idea, that the IMF report has become older, but the World Bank has recently released the India FSA report, the India Financial Sector Assessment report on their website. So as per the recent World Bank report, you have to answer the following questions. So try to answer the questions. See, rather than preparing this whole from the descriptive point of view, I will suggest that these points you can keep in mind. So that if any question comes on the financial condition of the country, then you can use these points, okay. A descriptive question, I will not say that no, the descriptive will not come. A descriptive question can come on the financial sector assessment program, especially the World Bank has released the India FSA report recently. So yes, a question can come on the assessment given by the World Bank, but if a descriptive question does not come on this topic, you can use the points from this report in your answer writing. If any question is coming about the financial health of our country, the points from this report can be used. So this report is important in any condition. A direct question can come, or indirectly you can use the data points from this report, okay. So based on the assessment carried out during 2024, the World Bank has released the India Financial Sector Assessment report on their website on October 30, 2025, very recently, and in November the RBI announced this in the RBI website also, okay. So currently financial sector assessment program is mandatory for 32 jurisdictions including India to be conducted every dash years, and for another 15 jurisdictions every dash years. So what is the answer? What should be the answer here? Yes, very good. So basically for 32 jurisdictions including India, the financial sector assessment program should be conducted every 5 years, and for another 15 jurisdictions every 10 years, okay. So D is the right answer here. Next is World Bank's FSA report. World Bank's financial sector assessment report highlights that India's financial system has become more resilient, diversified and inclusive since the last assessment that happened in 2017. The report acknowledges that financial sector reforms have helped India recover from various distress episodes of 2010 as well as pandemic. It stresses that achieving India's vision to what requires further impetus to the financial sector reforms. That means if India wants to have or achieve its vision, what is the vision? First of all, the vision is to become, very good, to become a $30 trillion economy by 2047. So you must know the vision of India. So basically it has been said that if India want to achieve the vision of becoming a $30 trillion economy by 2047, there is further impetus, there is further boost that has to be given to the financial sector reforms to boost the private capital mobilization, okay. So C is the answer here. Now coming to the last question from this particular paragraph. According to the World Bank, how much have India's capital markets grown as a percentage of GDP since the last financial sector assessment program? Okay, so this is another important point. This you can use in your descriptive answer writing. Any question coming on the financial sector health or the financial sector of the country. So in the descriptive answer writing, you can use this data point, okay. So how much have India's capital markets grown as a percentage of GDP since the last FSAP? So it is, see, from 144% to about 175% of GDP. So the growth is from 144% to 175% of the GDP. Okay. So the answer here is C again. So the important point, see, the whole report is important from the descriptive point of view. I don't have the time to discuss the whole report here, but the important points from the objective point of view is that the report, the financial sector assessment program, it is done for 32 jurisdictions. It is conducted every 5 years for another 15 jurisdictions every 10 years. Okay. Another important point is that the India's vision is to become a US dollar 30 trillion economy by 2047. On regulation and supervision of banks and NBFCs, the World Bank has acknowledged India's expansion of regulatory authority on cooperative banks, tightening of key prudential rules. So basically, the banks and the NBFCs, they are considered healthy, as well as there is the expansion of regulatory authority. Okay. World Bank acknowledges that oversight in securities market has been sound, good, backed by reforms including enhancing the collateral management and business continuity for investors. So business continuity plans are also considered good. Okay. Next is the FSA. So basically here the banks, here the securities market. Now coming to the insurance sector. So India's insurance sector development has been in line with the peers. Okay. Then climate risk analysis has also been done in this report. So this report is not only for banking sector. This report is not only for insurance sector. This report is the financial sector assessment program, or this report is the financial sector assessment. So the whole financial sector has been assessed by the World Bank. The insurance sector, the securities market, the banking sector, climate risk analysis, and all of that. So World Bank highlighted that agriculture and banking sector remain resilient to short-term climate shocks. However, the granular, the smaller data and adaptive measures are needed. That means detailed data and adaptive measures are needed as localized risk, prolonged agricultural shocks, and a difficult low carbon transition could still put financial strain. Okay. Then there are the updates that has happened. The RBI has taken various steps that has been discussed here. Insolvency and Bankruptcy Code 2016, out of code workout framework issued by the RBI so that the settlements can happen smoothly. The TREDS platform, the trade receivables discounting system for the micro, small and medium enterprises, priority sector lending for the different priority sectors, agriculture, MSMEs, the export, housing and such. So all of these are good measures that have been taken. These are the efforts to strengthen the credit infrastructure. Okay. As well as here you can see that the capital markets have increased from, the capital market share has increased from 144% of the GDP to about 175% of the GDP since the last FSAP. Now coming to the next question, a direct question. Try to answer this. Try to answer this question. Which instant payment system is India's UPI proposed to be linked? So which instant payment system is India's UPI proposed to be linked with under the RBI NIPL initiatives? So NIPL is the NPCI, International Payment Limited. Okay, it is the international arm of the NPCI to facilitate faster and more efficient cross-border payments with the Euro area, with the European area or Euro area. So it is basically target instant payment system. Settlement. TIPS. Very good. Yes, Mukund. Absolutely correct. Yes, Nilesh, correct. So the answer here is TIPS. Okay. So basically RBI has been actively pursuing interlinking of UPI with fast payment system of other jurisdictions. So recently the Reserve Bank of India and NPCI, International Payments Limited, NIPL, that is the international arm of NPCI, have been engaging with the European Central Bank on the initiative to connect UPI with the target instant payment settlement, that is TIPS, the instant payment system operated by the Euro system. Following constructive and sustained engagement, both sides have agreed to start the realization phase of the UPI TIPS link. So the UPI of India can get connected with the TIPS of Euro system. Okay, so this is a good news for UPI because UPI is already being used and being discussed and it has become an international target. Okay, and it is now getting connected with the TIPS, that is the Euro that is used in Euro area. So India's UPI will have further coverage and will have further further acknowledgement across the globe. Okay. Now coming to the next question. Under the Banking Laws Amendment Act 2025, which of the following statements correctly describes the nomination provisions coming into effect from 1st November 2025? So basically, Banking Law Amendment Act 2025, there were 19 provisions, or there were 19 amendments that were brought. Some of the amendments have already come into force, while some of the other provisions are going to come into force from 1st November 2025. Basically, the nomination related amendment, the nomination related provisions, they are going to come into effect from 1st November 2025. So which of the following statement is correct in regards to the nomination provision? Try to answer this. So nomination for deposit accounts, both sides. See, customers can nominate only one person for all types of account. No, nomination facility has been extended from 1% to 4%. Okay, so around 4%, up to 4%. Nomination can happen. Up to 4 nominees can be specified simultaneously as well as successfully. So there can be simultaneous or there can be successive nomination that can happen. Okay, for deposit accounts, both simultaneous and successive nominations are permitted, but for safe custody articles, safety lockers, only successive nominations are allowed. Successive nominations, see, simultaneous means that, let's say, Radha, Shyam, Kavya, Mukund. Okay, I am nominating these 4 people for my deposit account. Okay, so Radha will get 55%, Shyam will get 10%, Kavya will get, let's say, 20%, and Mukund will get the rest of the percent. So I have selected this is simultaneous nomination, that in case something happens to me, in case something happens, so from my deposit account, the money will be distributed in the proportionate form. This is simultaneous nomination. Successive nomination means, okay, Radha is the first person. If something happens to me, then the money will go to Radha. Let's say something happens to me and Radha is also not present. That means there is some accident and Radha is also not there. So now the next person is, let's say, Shyam. Shyam will get the money. In case something happened to Shyam also, then the third person, that is Kavya, will get the money. So this is the idea that this is successive nomination. So in the safe custody articles, in the safety lockers, only the successive nomination is allowed, while for the deposits, simultaneous as well as successive nominations are allowed. So C is the correct answer. Okay, yes, C is the correct statement. So here it has been said that for the Banking Law Amendment Act 2025, these sections of the Banking Law Amendment Act 2025, 10, 11, 12 and 15, they are going to come into force from 1st November 2025. Okay, so multiple nominations can happen up to 4%. Before, the nomination was usually of 1 person. Now the nomination, you can nominate up to 4%, and the nomination can be successive nomination or simultaneous nomination for your deposit account. Simultaneous means percentage has to be decided for the 4 people that you are nominating. Successive means that you are nominating, let's say, 4 people. XYZ person is nominating 4 people in the successive manner. A, B, C and D. In case XYZ dies and A also dies, then the B will get the whole money. In case XYZ, A and B has also died, then the C will get the money. Okay, so this is successive nomination. This is simultaneous nomination. Simultaneous nomination, like the people will get the money simultaneously. Proportion has to be decided by the depositor. Now, in case of safe custody and safety lockers, only successive nomination is allowed, while in case of deposits or deposit accounts, successive as well as simultaneous nomination is also allowed. Okay, so this is the idea. Now the 10th, so section 10, 11, 12 and 13. So section 10 is basically talking about that before only 1 person can be nominated, now up to 4% can be nominated, and for the deposit account, successive as well as simultaneous nomination can happen. Okay, so successes as well as simultaneous nomination can happen, but for the safe deposit lockers, only successive nomination can happen. For safe deposit lockers or for the safe custody articles, only the successive nomination can happen, not simultaneous. So this is the whole point. Okay, now coming to the next question, try to answer this question. So basically, with the Banking Law Amendment Act 2025, the nomination facility has been amended, and there is the announcement that has been done that 4 nomination can happen, successive nomination can happen, simultaneous nomination can happen. So the RBI has also released the whole guidelines for the nomination facility. So basically, the nomination facility is intended to facilitate the faster settlement of claims, and according so RBI has also released, the Reserve Bank of India has also released the directions, okay, with the Banking Law Amendment Act 2025 bringing the changes in the nomination facility. The RBI has also brought the detailed guidelines so that the clarity is maintained for the nominations. So try to answer this question. So basically, according to the directions, what happens if a nominee in a simultaneous nomination dies before receiving the deposit? Simultaneous nomination, simultaneous means that A, B, C, D, all the nominees will get the money from the deposit account in the proportion that was decided by the depositor, by the actual depositor. So let's say 10% A, 20% B, 50% C, and the rest 20% D. So now let's say A has died, or let's say B has died. So what will happen then? In this case, the nomination for that nominee alone becomes ineffective and the money will be distributed among the rest of the nominees. Okay, so this is the idea. Now the whole article, the RBI has introduced the RBI nomination facility in deposit accounts, safe deposit lockers, articles kept in safe custody with the banks. So basically, the Banking Law Amendment Act has said that 4 nominations can be done, successive and simultaneous nominations can be done for the deposit account, while the successive nomination can be done for the safe custody lockers. So the RBI has just explained it further and has just brought the detailed guidelines for the banks and such. Nothing much to remember from here. You can read it once. The important points are only that if multiple nominees are appointed, one nominee dies before receiving the deposit, in the case of simultaneous nomination, the nomination for that deceased nomination becomes invalid. So among the A, B, C and D, let's say 4 nominations were done. In the simultaneous case, A has died, so the money will be distributed between B, C and D. Okay, so this is the idea. Now, timeline for acknowledgement. So acknowledgement must be given within 3 working days of receiving the form for the nomination. In case there is some unclear or there is clarity that is not provided in the nomination form, so communication has to be given within 3 working days of receiving the form in case there is rejection that is happening of the nomination. Okay, so this is the idea. Now, bank must mark the passbook, account statement or term deposit receipt with the legend nomination registered wherever a nomination exists, as well as it has been clearly said that even in case of the person not giving any nomination, let's say I'm opening a deposit account but I am not giving any nomination, in this case I cannot be denied the facility of having the deposit account. So basically, if a person is not giving nomination or if I'm not giving nomination, still I can take the banking facility. Okay, so now coming to the next part or the next paragraph, try to answer this. So basically, in exercise of powers conferred by Section 45W of Reserve Bank of India Act 1934 and of all powers enabling with the RBI, a master action has been released by the Reserve Bank of India. Okay, now the name of the master action has not been given here. So first of all, you have to understand that this paragraph is about what. Okay, so basically, these directions shall come into force with immediate effect. These directions shall be applicable to repurchase transactions. So these directions are for repo transactions undertaken on recognized stock exchange. Here we are not talking about the repo transactions or the repo rate of the RBI. Here we are talking about the repo transactions undertaken on the recognized stock exchanges, electronic trading platforms and over the counter to the extent stated herein in the directions. These directions shall not apply to repo or reverse repo transactions under the liquidity adjustment facility of the RBI. Okay, so basically, first of all, these directions, this master direction is for what? It is for the repo transactions that is undertaken on the recognized stock exchanges, electronic trading platform over the counter. This master direction is not applicable for the repo transactions or reverse repo transaction under the LAF facility of the RBI. So basically, the repo transactions, they are also happening on the recognized stock exchanges, they are also happening over the electronic trading platforms, they are also happening over the counter. The banks, they also like the banks amongst themselves also, they take repo transactions. What are the repo transactions? First of all, let's say bank A has the money, bank B requires money. So bank B can borrow the money from bank A by providing the collateral. Okay, so amongst the bank, the repo transaction that is happening, that is this repo transaction. It can happen over the recognized stock exchange, electronic trading platform, or over the counter. So the master action is about the repo transaction that is happening in the different domains, not directly with the RBI. Okay, so now as per the master action, repos shall be undertaken for a minimum period of what and the maximum period of what. So minimum period of 1 day and maximum period of 1 year. Very good, everyone. So yes, so repos shall be undertaken for a minimum period of 1 day and maximum period of 1 year. As per the directions, the minimum haircut applicable to listed corporate bonds and debentures in repo transaction is, so the collateral, the repo transactions that are happening. See, the repo transaction or the repo under the Reserve Bank of India, under the liquidity adjustment facility, the repo rate and such, the RBI only allows the collateral as the government securities. But when the repo transaction is happening between the banks, between the different entities, between the primary dealers and such, so if the repo transaction is happening over these platforms, over these areas by the different entities, so they can also have the corporate bonds, debentures, the listed corporate bonds or listed debentures as the collateral. Okay, so as per the directions, the minimum haircut. What is haircut? I hope you know. If you do not know, we will discuss it further. So any answer, anyone? B. Okay, so B is not the answer. We will discuss this question again once we have discussed the article. Okay, so let's discuss these two questions once we have discussed the article. So this article has been recently released and it is very important. Master action of Reserve Bank of India repurchase transaction directions 2025. So basically, first of all, in October 2025, it was notified by the Ministry of Finance that for the repo and reverse repo transactions that are happening over the different platforms, the municipal debt securities. So in exercise of the powers, with the reserve, in exercise of the powers, the central government hereby specifies that the municipal debt securities having the meaning assigned to it in the SEBI Act or the rules or regulations to be a security under this section for the purpose of repo and reverse repo. So basically, it has been said that the municipal debt securities, they can also be used as collateral for the repo and reverse repo transactions. So accordingly, the aforesaid directions are being updated. So this Reserve Bank of India repurchase transactions of 2018. So the directions of 2018 are being updated. So the directions of 2018 are being updated in 2025, as now the municipal debt securities will also be considered as a collateral for the repo and reverse repo transaction. This you will understand better in the coming slides. Okay. So first of all, these directions shall be applicable to repurchase transaction to the repo transaction that is undertaken on recognized stock exchanges, electronic trading platform and over the counter. Okay. Such transactions, the repo transactions, the borrowing and lending is happening between the banks, between the primary dealers or between the different entities. The RBI is not directly involved here in the sense that this kind of transaction is not in the liquidity adjustment facility. So these directions are for the repo transaction that is happening through the recognized stock exchanges, ETP or through the over the counter. Okay, these directions shall not apply to repo or reverse repo transactions under the liquidity adjustment facility of the Reserve Bank of India that we discuss in the monetary policies chapter. Okay. So liquidity adjustment facility, I hope you know, liquidity LAF corridor consists of repo rate, MSF rate and the SDF rate. Okay, so the repo transactions or the reverse repo transaction that is happening with the RBI and between the banks and the RBI, so this kind of transactions is not under the direction. Okay, so these directions are only for the repo transactions undertaken on the recognized stock exchange, ETP and such. Now coming to the idea, eligible securities. What are the collateral securities for the repo transactions and such that are undertaken on the recognized stock exchange, ETP or the over the counter? So the government securities issued by the central government or state government, listed corporate bonds, debentures, subject to the condition that no participant shall borrow against the collateral of its own securities. That means, let's say XYZ entity wants to borrow. ABC is lending. So XYZ is giving the collateral in the form of corporate bond. ABC is lending to the XYZ. Okay, so the collateral that is given in corporate bond, so XYZ entity, XYZ company cannot give its own corporate bond as a collateral. Okay, so this is the idea. So listed corporate bonds, debentures can also be used as a collateral. Commercial papers, certificate of deposit, units of debt exchange traded funds, municipal debt securities. Here you can see this can also be used as a collateral. This can also be used as the collateral for the repo transactions. Eligible participants, any regulated entity under the Reserve Bank of India, any listed corporate, any unlisted company that has got the special securities, by the Government of India. All India financial institutions such as the Exim Bank, NABARD, NHB, SIDBI, NAFID, so they can also participate in this repo transaction that is happening through the recognized stock exchanges, electronic trading platform, or over the counter. Tenure of such repos should be minimum period of 1 day and maximum period of 1 year. Okay. Reporting of trades, so the trade has to be reported. The disseminate trade information on the platforms shall be reported. So if there is the repo transaction that is happening, that should be reported within 15 minutes of the trade. So repo in government securities to the clear corp repo order matching system, and repo in other repo transaction that is happening with other collateral, that is other than the central government securities or the other than the government securities, if the collateral is given in the form of corporate bond or the listed debenture and such, so that has to be reported to the FTRAC platform. Okay, so this is the idea. Now settlement of trades. So the first leg of all repo transaction, first leg means in the repo transaction, what is the first transaction that is happening? First transaction is that ABC is giving loan to XYZ, and XYZ is giving collateral in the form of, let's say, corporate bond to ABC. So this is the first leg of the transaction. The second leg of the transaction will be the return. XYZ will return the money with the interest and ABC will return the collateral. So this will be the second leg. So first leg is loan is given and collateral is taken. So the first leg should be completed within T+0, that means on the same day of the trade, or T+1, that is by the next day of the trade has to be settled. And the trade or the transaction, repo transaction, shall settle on delivery versus payment basis. That means collateral has to be delivered and the payment has to be done. So there should be no delay. As soon as the delivery is happening, as soon as the payment is happening of the loan, the delivery of collateral should happen. Okay, so all repo transactions shall settle on delivery versus payment basis. That is, there is no delay in payment or there is no delay in delivery that should happen. If payment is given, delivery should happen immediately. All repo in government securities shall settle through CCIL or any other clearing agency approved by the Reserve Bank of India, while the repos in other eligible securities with collateral as corporate bonds or the debentures or commercial papers and such shall settle through the clearing house of exchanges or any other entity which has been approved by RBI. Okay. Now haircut. Haircut is what? Haircut is basically the difference between market value of collateral. Let's say market value of the corporate bond is 2 crores or let's say 10 crores. The market value of the corporate bond that is given as collateral is 10 crore. But what if the corporate bond value decreases? So there is haircut that is taken. Haircut is the difference between the market value of the collateral and the amount that is borrowed or lent against the collateral. Okay. So market value of collateral is 10 crore, but the loan that is given is only 8 crore. Okay. So basically the corporate bond that is given as collateral, its value is 10 crore. But the loan that is given is valued at 8 crore, or the loan that is given is 8 crore, because there is some haircut that is taken. Haircut is the difference between the market value of the collateral and the loan that is given. So listed corporate bonds and debentures shall carry a minimum haircut of 2% of market value, while the commercial papers certificate of deposits shall carry a minimum haircut of 1.5% of the market value. Securities issued by the local authority like the municipal bonds and such shall have the minimum haircut of 2%. So this is the idea. Now the rest you can read, as well as here it is written that if the repo is happening, including tri-party repo basically means ABC is giving loan to XYZ is giving collateral to ABC. Tri-party means there is a third party, that is the intermediary, that is helping in the transaction between ABC and XYZ. That is the tri-party repo. Just a intermediary is present in between. So if the repo transaction include the government securities as collateral, so this kind of transaction shall be exempted from CRR or SLR computation. Okay, while if the borrowing by a bank, if the bank is borrowing, let's say XYZ is a bank that is borrowing from another bank. Okay, so if the bank is borrowing, so this is a liability, the bank will have to return the money. So this is a liability. Against the liability, the cash reserve ratio and the statutory liquidity ratio has to be maintained. If the repo transaction is having the collateral, that is corporate bonds or debentures and such. Okay, so if the collateral is government securities, there is no requirement of keeping the CRR, SLR and such. But if the collateral is anything other than the government securities, then there is the requirement of keeping the CRR, SLR and such. Okay, now try to answer this question. Now try to answer this question. As per the directions, the minimum haircut applicable to listed corporate bonds and debentures in repo transaction is, and if there is any confusion, do ask me. Okay, I have tried to explain this whole article. As per the direction, the minimum haircut applicable to listed corporate bonds and debenture in repo transaction is 2%. Okay, for the commercial papers and for the certificate of deposit, the minimum haircut is 1.5%. But for the corporate bonds, debentures, bonds of local authorities, the minimum haircut is 2%. Okay, so this is the idea. Very good. Chalo. Now next is the central government in exercise of the powers has specified the dash to be a security under the said section for the purpose of repo or reverse repo transaction. So which security has recently been added as a collateral? State development loans, foreign sovereign bonds, municipal debt securities, money market mutual funds, housing loan pass through certificates. Try to answer this. Yes, it is. Very good. Municipal debt securities. Okay. Chalo. Now coming to the next question. SEBI has launched the Mitra platform to help investors and heirs trace inactive or unclaimed mutual fund folios. Which entities jointly developed this platform? So this we had discussed in the October month also. So which entities jointly developed this platform? The CAMS and KFin Technology. So D is the answer here. Okay. So SEBI has launched the Mitra platform, that is Mutual Fund Investment Tracing and Retrieval Assistant. If there are unclaimed mutual fund folios, so that can be claimed through this Mitra platform, and this has been developed by the mutual fund registrar and transfer agents, that are the intermediaries involved in the mutual funds, the CAMS, that is the Computer Age Management Services Limited, and KFin Technologies. So these three, so mutual fund registrar and transfer agents, CAMS, as well as KFin Technologies, they have developed this digital platform, that is Mitra. Now coming to the next one, Japan is set to enable UPI payments through integration with its CAFIS network. Which company operates this system? So Japan is set to enable the UPI payments through integration with its CAFIS network. So Japan is also allowing the UPI payments. You can understand that UPI is being acknowledged around the globe and it is becoming very popular. It is becoming one of the India's pride, we can say. So Japan is set to enable the UPI payments. Now, which company operates this system of Japan? NTT Data Japan. Okay. So just the basic idea you need to have. Basically, Japan is set to enable UPI payments for Indian tourists through a collaboration between NIPL and NTT Data Japan. Okay. Rest is Global Fintech Fest 2025 that is organized in Mumbai, and there are different winners that have been selected. Fintech Startup of the Year is UB. So this you can keep in mind. The rest names you can read, but the most important is Fintech Startup of the Year. The rest you can read once. Now coming to the next question, that is the newly introduced Pay with Mutual Fund feature allows users to make UPI payments directly from their liquid mutual fund folios. So what has been said that directly through the mutual fund, the payment you can do if the mutual fund is liquid. That means it is not being held for 3 years, for 5 years and such. It is not being like for a time period. Okay, so if you have a liquid mutual fund, the payment can happen through the UPI, through the liquid mutual fund. Which of the following entities has partnered with these asset management companies to enable the backend technology for instant redemption linked UPI payments? Okay, so which of these entities have been connected with the ICICI Prudential Mutual Fund and Bajaj Finserv Asset Management Company to allow this Pay with Mutual Fund? So it is Curie Money. Okay, so this was quite in news recently. So that's why I've brought this question. So basically the pay with mutual fund feature was launched, allowing the UPI payments directly from liquid mutual fund holdings. ICICI Prudential Mutual Fund, Bajaj Finserv Asset Management Company have launched the service in partnership with Curie Money. Okay. Now next is Hello UPI provides voice enabled digital payments through both app based and telecom IVR modes. Which of the following limits applies to the on-call Hello UPI mode? So Hello UPI provides voice enabled digital payments. So using your voice or using the voice commands, you can do the UPI payments. Okay. Now there is also a on-call feature, on-call hello feature that is provided, but for the on-call hello feature there are certain limits. Which of the following limits is being followed? Maximum 5 transactions per day up to 1000 each. Okay, so D is the answer here. So basically Hello UPI is a voice enabled UPI feature that was launched, developed by the NPCI. It allows users to make UPI transactions using voice commands. So in app Hello UPI, this requires internet and integrates the voice navigation into UPI app. So directly in Google Pay and Phone Pay, just with the voice commands, you are giving the command and the payment is happening. Okay, so this is in app. On-call Hello UPI works without internet through voice interaction over the telecom network. So on-call Hello, in this there is the limit up to 5 transactions per day and maximum 1000 per transaction. Okay. Now coming to the next question, SEBI has constituted a working group to review the financial structure and fee framework of clearing corporations. Clearing corporations, they are the ones that help in the settlement and clearing of the trade. So the settlement and the clearing of the trade happens through the clearing corporation. So there is the working group that has been established to review the financial structure and fee framework, the fee that is taken by clearing corporations, including proposals to increase their transaction fees share and strengthen the contribution to the settlement guarantee fund. Who is heading this working group that is looking after the proposals to increase the transaction fee for the clearing corporation and such? So the answer here is R.S. Gandhi. Very good. So basically, working group formed by SEBI headed by former RBI Deputy Governor R.S. Gandhi is reviewing the financial structure of clearing corporation. Increased transaction charges for clearing corporation like NSE clearing. So clearing corporation can have the increased transaction charges. Clearing members who settle and clear trades. So clearing members, they are the intermediaries under the clearing corporation. They help in the settlement and the clearing of the trade. They may also be required to contribute to the settlement guarantee fund. Now coming to the next question, according to RBI's 2024-25 survey on software and the information technology enabled services exports, India's software services were predominantly invoiced in a single major global currency. That means we have received the payment for the exports, okay, in a single major currency. That is, this currency accounted for 72% of the total invoicing of the export services. So basically we have exported the services, and for the export of the services we have got the bill invoices, and we have got the money, or we are getting the money majorly in which of the following currency? Which currency was the principal invoicing currency? Is it Indian rupee, Japanese yen, euro, US dollar, pound sterling? It is US dollar. Very good. Yes. So in such kind of question, you can take an intelligent guess. You might get confused between Indian rupee and US dollar, but think about it that the transactions, till now we are taking steps for internationalization of rupee, but till now US dollar is the predominant currency through which the transaction take place, or in which the transaction takes place. So the intelligent guess should be US dollar. Okay. So basically, survey on computer software information technology enabled service exports, the data has been recently released. So exports of software services by the Indian companies, they have increased by 7.3% from the previous financial year. Computer services continue to account for over 2/3 of the India's total software services. Okay, and the BPO services, the business process outsourcing services, remain the major component of IT enabled services. Software exports to the USA has increased, but at a lower pace of 4.9%. compared to 14.3% growth of the export that we are doing of the services, software exports that we are doing to Europe. US dollar was the principal invoicing currency, constituting 72% of the India software exports. So the major invoicing has happened in the US dollar. After that in euro, then in INR, then in pound sterling. Okay. And remember that the share of USA has decreased in the total software exports from 54.1% to 52.9%, while for the Europe, the share of software exports has increased from 30.8% to 32.8%. Okay. Next important point here, you can see that in US dollar, major of the invoicing has happened in the US dollar, then in euro, then in INR, then in the other currencies. Okay. Now coming to the next question. So this question we have discussed again and again in October discussion of the RBI notifications and press releases. So now we are going to discuss some of the October RBI notifications and press releases. So try to answer this question. I don't think that explanation is needed here because we have discussed this again and again before the phase 1. Now RBI has released the RBI authentication mechanism for digital payment transaction directions 2025. Now which of the following statement is or are correct that you have to tell? Every digital payment transaction in India must be verified using two-factor authentication. Correct. One of the factors should be dynamic. Correct. Excluding for physical card present once if the physical card is present at the merchant location. So in this case, the dynamic factor is not required, so this is correct. Okay. Based on the perceived risk associated with the transaction, additional checks beyond the two-factor authentication can be done. Yes. If there is perceived risk, then more than two-factor authentication can happen, or there can be additional checks other than the two-factor authentication. Card issuers shall by October 1, 2026 put in place a mechanism to validate non-recurring cross-border card not present transactions. So where the card is not present at the merchant location, if the cross-border transaction is happening, in this case the validation should happen. This is correct. If any customer suffers a loss due to non-compliance with these directions, if the issuers, if the banks, if the non-bank companies, they are not following these directions and a loss is happening to the customer, then the customer should bear the burden. No, then the issuer will bear the burden. The bank or the non-bank will bear the loss. Okay, so this is wrong. The customer will not bear the loss. So first, second and third statements are correct. So here the answer is E. Here the answer is E. Okay. First, second and third statements are correct. So this we have discussed again and again. Two-factor authentication has been said that there should be two-factor authentication. At least one factor should be dynamic in nature. Okay, it should be dynamically created like the dynamic CVV and such. As well as it has been said that risk-based approach is required in case if there is risk that is perceived. So there are additional checks that should happen, as well as responsibility of the issuer. The bank should take the responsibility if they are not following the directions. The non-bank, the company should take the responsibility. Okay. In case of cross-border transactions where the card is not present and the non-recurring transaction is happening, in this case validation requirement is there. Okay. So this is the idea. Now for the October, see, for the November we have discussed a lot of questions. We have discussed the major articles. For the October, I am going to discuss the questions with you, but remember that you have to go through the different marathons that I had taken before phase 1. So before phase 1, all the marathons that have been conducted, go through them, because the more questions you are solving, the more revision is happening, the more the things are getting ingrained in your mind, as well as you in today's session, because there are so many of the articles, I will be able to cover the limited ones. From November, I've tried to cover the most of the articles, but from October, I'm covering the limited ones. Okay, so see the phase 1 marathon so that you have the coverage of the other articles also. Okay, now coming to the next question. This is a paragraph based question. Again, the payment aggregators direction 2025, this was released. This we have discussed again and again in different marathons. Okay, so try to answer this question. And from this particular payment aggregator direction, in phase 1 also there was a question that has come. In phase 2 also you can expect a paragraph based question or a question. Try to answer this. So under the RBI's payment aggregator directions 2025, what is the minimum net worth requirement for a non-bank entity? So if a non-bank entity wants to become a payment aggregator, by the end of third financial year of grant of authorization, what should be the minimum net worth? So it should be 25 crore. At the time of authorization, 15 crore. by the end of third financial year, 25 crore. Okay, so 25 crore is the answer. Read the question carefully. Next question, try to answer this. The core portion of escrow account shall continue to be maintained within the escrow account. The core portion, see, core portion is the portion that is the reserved portion of the escrow account. This should be maintained in the escrow account only. This facility shall be permissible to entities who have been in business for how many fortnights? For 26 fortnights. For 26 fortnights. Okay. Next is payment to any other account that is happening through the escrow account by the payment aggregator on behalf of the merchant if the payment is happening to any other account on specific direction of a merchant to the payment aggregator through the escrow account the merchant having physical or online presence with an annual turnover of how many lakhs and annual export turnover of how many lakhs. So annual turnover of 40 lakhs or annual export turnover of 5 lakhs. So here the answer is E. Okay. So payment aggregator directions we have discussed again and again in the marathon session. So I'm not going to waste your time on this because I hope that you have covered this direction before the phase 1 as well as you have the clarity of this direction. So payment aggregators, they are the entity that provide the merchants with the facility to take the money from the customers through the UPI facility, through Google Pay, Phone Pay, through the wallets, through the cards, through various instruments. Okay, so payment aggregators, they help in the transfer of money from the customers to the merchants. Okay, or if refund has to be given or the transfer has to happen, so the payment aggregators, they help in the transfer of the money and they provide the interface for the customers to pay and such. So if a non-bank entity wants to become a payment aggregator, they need to take the authorization. Okay, as well as an entity seeking authorization to commence a payment aggregator business. If a non-bank entity wants to become a payment aggregator, they need to have a minimum net worth of 15 crore at the time of getting the authorization, and they need to have the 25 crore of minimum net worth by the end of third financial year. This is the requirement. Okay, as well as see, a payment aggregator that is doing the cross-border transaction, because let's say the merchant is of Europe and the customer is in India. So then also the transaction should happen between the merchant and the customer. So there is a payment aggregator cross-border, that is for this kind of facility where the merchant is of another country and the customer is in India, or the merchant is in India and the customer is of another country. So for the cross-border transaction, the payment aggregators are there. Okay, they can have the inward accounts or they can have the outward accounts depending on where the merchant is. So maximum value per transaction for the inward or outward transactions, the maximum value per transaction that can be processed by a payment aggregator cross-border is 25 lakh. Okay, the rest of the article, like the whole of the article, we have discussed very in detail in one of the Finance 360 session, also in marathons also. Core portion of escrow account is the protected reserve in the escrow account that this facility shall be permissible to entities who have been in business for 26 fortnights. Okay, now coming to the next question. As per the RBI, see, under the capital that the banks have to maintain, there is the tier 1 capital or there is the tier 2 capital. In the tier 1 capital, there is the common equity tier 1 capital that is called the most liquid capital that the banks have to handle the distress. There is also additional tier 1 capital. Okay, additional tier 1 capital, it is basically the perpetual debt instruments, they can come under the additional tier 1 capital. So basically it has been said that the perpetual debt instruments that have no maturity. So perpetual debt instruments, if they are denominated in foreign currency or rupee denominated bonds, so these perpetual debt instruments, they can be included in the additional tier 1 capital up to the limit of 1.5% of risk weighted asset. Okay, so the answer here is C. The answer here is C, 1.5% of risk-weighted asset. So capital is maintained. The banks have to maintain the capital against the risk-weighted asset, against the assets that have some risk. So perpetual debt instruments that can be kept as the AT1 capital, as the additional tier 1 capital. So perpetual debt instruments can be kept 1.5% of the risk-weighted asset. Okay, so this is the idea. So here you can see that under the new framework, the revised eligible limit for inclusion of such PDIs. So perpetual debt instruments, they have no, they are the debt instruments that have no maturity. Okay, so perpetual debt instruments that are denominated in foreign currency or rupee denominated bonds. So with these perpetual debt instruments, they can be a part of additional tier 1 capital up to 1.5% of risk weighted asset. Okay. Now here you can see that for scheduled commercial banks, the CRAR is 9%. The capital to risk weighted asset ratio, the capital that has to be maintained against the risk weighted asset is 9%, out of which the common equity tier 1 capital, see, so the capital to risk weighted asset ratio for banks is 9%, scheduled commercial bank it is 9%, and tier 1 capital in this common equity tier 1 capital minimum should be 5.5%, AT1 can be 1.5%, and the tier 2 capital is 2%. Okay, so minimum of the common equity tier 1, this is minimum. Okay, minimum of common equity tier 1 capital is 5.5%. So this is the idea. In total, the tier 1 capital is 7% and the rest is tier 2 capital. Chalo, now coming to the next question. Consider the following statements regarding the RBI scheme aimed at reducing the unclaimed deposits and reactivating the inoperative accounts. So RBI, to reduce the unclaimed deposits and to reactivate the inoperative account, has brought a scheme that provides incentive to the bank to reduce the unclaimed deposits and to increase to reactivate the inoperative account. So which of the following statement is correct in regards to this scheme? So try to answer this question. So the scheme will remain open for 3 years. First of all, no, the scheme will remain open for only 1 year, from 1st October 2025 to September 30, 2026. Under the payout structure, banks can receive up to 7% of the amount or 15,000, whichever is less, for reactivating inoperative accounts that are inoperative for 8 to 10 years. Correct. The scheme would be applicable to all the banks registered under the Depositor Education and Awareness Fund scheme. Correct. So second and third statements are correct. First was wrong, and that's why C is the answer here. First is wrong now, because the scheme will remain open only for 1 year, from 2025 to 2026. Okay, so the scheme will remain open. The scheme will remain open only for 1 year, from 2025 to 2026. And here it has been said that the banks, if they are reactivating the inoperative account, they will get the incentive, or if they are returning the unclaimed deposits, they will get the incentive. Okay, so this is the idea. Inoperative accounts are the accounts that are inoperative, that are not being operated, and up to 4 years, if the inoperative account is up to 4 years, they will get the incentive of 5% of the amount, or 5,000. Or if the inoperative account is from the period of 4 to 8 years or 8 to 10 years, they will get the incentive. If the unclaimed deposits are those deposits that are unclaimed for 10 years and above, they will get the incentive of 7.5% of the amount, or 25,000, whichever is less. Now coming to the next question. This is in regards to the settlement of claims in respect of deceased customer of banks directions 2025. This was also discussed in October. When we were discussing the topic in different marathons, this has been discussed. So let's discuss the questions in a fast manner. So under the directions of the settlement of claims in respect of deceased customers of banks. So if a customer dies, or if there is a deceased customer, how the money should be released to the legal heirs or to the nominees, or if there is no nomination, how the money can be released to the legal heirs. Okay, so under the direction simplified claim settlement without nomination, if there is no nomination, if the customer has died, there is a deceased customer of the bank, and the customer had 10 lakh rupees in the bank account. Now who should get this money? There is no nomination, let's say. So in this case, legal heirs can get the money. So under the directions, it has been said that simplified claim settlement can happen if there is no nomination. This is allowed below a threshold limit of dash or such higher limit as may be fixed by the banks, okay, including a cooperative bank. So what is the threshold limit where the simplified claim settlement can be done as per RBI? Yes, very good. B is the answer. 5 lakh for cooperative banks and 15 lakh for other banks. So this is the threshold amount, or this is the threshold limit as per RBI. This is the threshold limit as per RBI where the simplified claim settlement can happen. Other banks can decide the limits more than this as per their own understanding, okay. Next is, as per the directions, what is the maximum time allowed to settle a deposit claim after receipt of complete documentation? So if there is a deposit account and the customer has died, there is a deceased customer, the nominee after providing all documentation, should get, after the complete documentation has been provided, the nominee should get the money within how many days? Within 15 calendar days from the bank. Okay, so within 15 calendar days, the settlement should happen of the deposit account. Now, what compensation must a bank pay for delayed settlement of deposits beyond the prescribed period? So, within 15 days, if the settlement is not happening after the documents have been provided, so in this case, for the delayed settlement, for the delayed period of settlement, what is the compensation that has to be provided by the bank to the nominee or to the customer? It is interest at bank rate plus 4%. B is the answer. Okay, interest. So compensation must what compensation must a bank pay for delayed settlement of deposits beyond the prescribed period? So it is interest at bank rate plus 4%. Okay, so B is the answer here. So Reserve Bank of India, settlement of claims in respect of deceased customers. So in this case, the whole directions have been laid down that the money has to be provided to the nominees or to the legal heirs without much problem, and there is documentation requirement that has been laid down that if in case the deposit account customer dies, then, or if in case safe custody locker was there and the customer has died, so how the money can be released to the nominees or to the legal heirs without much problem. Okay, so the directions have been laid down. So here you can see simplified procedure is allowed for claims below the threshold limit. Threshold limit means 5 lakh in case of cooperative banks, 15 lakh in case of other banks and such. Okay, the rest are the like details that you can read. The important points are here that settlement should happen within 15 calendar days of receiving the complete documents for the deposit accounts, and for lockers or safe custody accounts, the within 15 days of getting the complete documents, the bank must process the claim and fix the inventory date, that is on what particular date the nominee or the legal heir will come to get the inventory from the locker or safe custody. Okay, if there is any delay that is happening in returning the deposit amount or in paying the deposit account, if the settlement is not happening within 15 days of getting the whole documents, so interest at bank rate plus 4% per annum for delay due to bank, or in case of locker or safe custody, let's say a date was decided for releasing the inventory to the nominee, and on that day the inventory was not released to the nominee or to the legal heir due to the problem in the bank, so in this case penalty of 5,000 per day of delay beyond prescribed period. Okay, so this is the idea. Now try to answer this question. This is another question from your RBI notifications. So try to answer this question. Let's see how many of you are able to answer this. So basically, based on stakeholder feedback, the Reserve Bank has issued final directions simplifying the reconciliation of small value export and import transactions. So basically, it has been said that for the small value import and export transactions, the transactions that are happening, the bill invoices that are there or the entries that are there, for the small value transactions, there should not be much documentation that has to be taken, okay, for the small value export and import. So under the new procedure, authorized dealer category 1 banks, they are the banks that are authorized to help in the foreign exchange transactions or to undertake or to help in the selling and buying of the foreign exchange. Okay, so authorized dealer category 1 banks, they are allowed to reconcile and close the export and import entries based solely on a declaration by an exporter or importer for transactions valued at up to what amount per bill or entry. So which transaction will be considered the small value transaction where the entries can be filled with the declaration of the exporter or importer and not much documentation will be taken, just the declaration has to be signed by the exporter or the importer. So the small value transaction is considered 10 lakh here, 10 lakh per entry or bill, enabling banks to close small value export or import entries with minimal documentation, only with the declaration by the exporter or the importer. Okay, so this is the idea. To reduce the compliance burden on small exporters and importers, it has been said that the entries will be closed in the export data processing and monitoring system and import data processing and monitoring system. The entries will be closed with the self-declaration, with the declaration given by the exporter or importer. If the transaction is of small value, if the export or import is of small value, that is 10 lakh rupees per entry or bill. Okay, so more documentation is not required. Now MTT, we have discussed this MTT. This is a merchanting trade transaction where, let's say, we are importing a product from China and we are directly selling it to Germany without letting the product enter the Indian market. We are just transferring the product. Okay, so merchanting trade transaction, for the whole merchanting trade transaction, import from China, export to Germany, for this whole period, 9-month timeline is given. But it is said that for the import payment before, it was said that it should happen, the import payment should happen within 4 months. Now the timeline has been increased to 6 months. So import payment should happen within the 9 months. The import payment should happen within 6 months. Okay. Now coming to the next question. This is regarding the SRO for the NBFC sector. Try to answer this question. So basically, the Reserve Bank had issued the press release on invitation of application for recognition of SRO for NBFCs. Okay. So recently, a SRO has been chosen for the NBFC sector. The self-regulatory organization has been chosen for the NBFC sector. To ensure fair representation to smaller NBFCs, the SRO shall have at least 10% of the total members from the base layer as per scale-based regulatory framework and categorized as what? As its members. Very good. E is the right answer. So basically, it has been said that a SRO in the NBFC sector should have the members from NBFC, ICC, NBFC, housing finance companies, and NBFC factor. Okay, so the SRO in the NBFC, the self-regulatory organization in the NBFC, should have the members from the NBFC, ICC, NBFC housing finance company, and NBFC factor. Okay, and the SRO should have the small NBFCs also as its member. So SRO NBFCs should have at least 10% of the total number of NBFCs. 10% of the total number of NBFCs that are members of the SRO shall be from the base layer from the NBFC, ICC, and the NBFC factor and NBFC ICC. Okay, so 10%. So this is the idea. Okay, so first of all, the SRO, the FIMDA, the FIDC, that is Finance Industry Development Council, has been selected as the SRO for NBFCs. Okay, the SRO for NBFC shall have the members as the NBFC ICCs, the NBFC Investment and Credit Company, the NBFC Housing Finance Company, NBFC factor. So these three categories should be members of the SRO of the NBFC. So self-regulatory organization of the NBFC should have the members as the NBFC ICC, NBFC Housing Finance Company, NBFC factor. Now, at least 10% out of all the members of the SRO, at least 10 members of the total number of members, out of all the members, 10% should be from the base layer of the NBFC and should be from the NBFC ICC and NBFC factor, because NBFC ICC and NBFC factor can be in the base layer. Okay. So basically, NBFC Housing Finance Company, it can be included in the middle layer or upper layer. So NBFCs, they are divided into 4 layers: NBFC base layer, NBFC middle layer, NBFC upper layer, and NBFC top layer. So the smaller NBFCs are in the base layer. So 10% of the members in the SRO NBFC. So 10% of the members in the SRO should be from the base layer, and in the base layer there can be the NBFC ICC or NBFC factor. NBFC Housing Finance Company cannot be in the base layer, it can be in the middle layer or upper layer. That's why it has been specified that NBFC ICC and NBFC factor that are in the base layer. So 10% of the members in the SRO, 10% of the members in the SRO should be from the base layer, from the ICC, from the factor. Okay, so NBFC ICC and NBFC factors can be in the base layer also. It can be in any layer, it can also be in the base layer. Now, as well as minimum net worth of the SRO should be 2 crore within a period of 1 year after the recognition as the SRO, and if the membership criteria is not met within 2 years, then the revocation of the recognition can happen. Okay. Now coming to the next question, try to answer this question. Which body conceptualized Which body conceptualized the interoperable regulatory sandbox under the Financial Stability and Development Council? So basically the regulatory sandbox, it is the sandbox in which the live testing can happen of the financial product, financial service. So RBI has its own regulatory sandbox, the SEBI has its own regulatory sandbox. Now let's say there is a financial product or financial service that is going to help in the different domains, in the banking sector domain, in the securities market, in the insurance market. So this kind of financial product will be tested in the regulatory sandbox of RBI, regulatory sandbox of SEBI, regulatory sandbox of IRDI. So the same product will be tested in 3 different regulatory sandbox. Rather than testing the product in different regulatory sandbox, there is an interoperable regulatory sandbox that comes in the domain of all the regulators. Okay, so this kind of interoperable regulatory sandbox is being facilitated by which body? So which body conceptualized the interoperable regulatory sandbox under the FSDC subcommittee to facilitate testing of cross-sectoral financial innovations? So it is the Inter-Regulatory Technical Group on Fintech. Okay, so this is the idea. Now PFRD does not have an independent sandbox. That's why it is only a associate regulator in the interoperable regulatory sandbox. Okay, the other regulators are the principal regulators because they have their own regulatory sandbox also. Now try to answer this question. The Reserve Bank of India revised its liquidity management framework while retaining the symmetric corridor system. So basically, the RBI has revised its liquidity management framework. So which of the following statement accurately reflects these revision? Anyone who is able to answer this question? The 14-day variable repo rate will continue to be the main operation for managing the short-term liquidity? No. Now the 7-day variable repo rate will be the main operation for maintaining short-term liquidity. The policy repo rate in the liquidity adjustment facility corridor, in the LAF corridor, repo rate is in the middle, MSF, Martian standing facility rate, is at the ceiling or top, and the SDF is at the bottom or floor. So SDF is the lower bound, MSF is the upper bound, and repo rate is in the middle. Okay, so this is also wrong. The overnight weighted average call rate remains the operating target. Yes. So when the repo rate is changing, with that change in the repo rate, if the RBI is increasing the repo rate or decreasing the repo rate, the RBI wants that the weighted average call rate is the overnight rate at which the borrowing and lending is happening between the banks. So call rate should also be changed. Okay, so operating target of repo rate or monetary policy is weighted average call rate. This is the overnight rate. This is the overnight rate at which the borrowing and lending is happening between the banks. So if the RBI is changing the repo rate, the RBI wants that the call rate, the overnight weighted average call rate, should also change as per the change in the repo rate. So this is correct. Standalone primary dealers, they will have access to repo operation. Yes, this is also correct. So 3 and 4 are correct. The first and second was wrong. Okay. So basically, the revised liquidity management framework, it was under the chairmanship. There was an internal working group under the chairmanship of Dr. Poonam Gupta. And these are the recommendations that have been accepted, that the overnight weighted average call rate will continue to be the operating target of the monetary policy. If the repo rate is increasing or decreasing, with that, the target will be to change the call rate, the overnight rate at which the banks borrow and lend. The symmetric corridor is maintained. In between, there is repo rate. There is at the top MSF rate is there, at the bottom SDF rate is there. SDF rate is less than the repo rate by 0.25% and MSF is more than the repo rate by 0.25%. Now instead of 14-day variable rate repo, that was the target before, now 7-day variable repo rate or variable reverse repo rate will be the target. Okay, so this is the idea. The current requirement of maintaining, so CRR is, let's say, 3.5% of the NDTL. Okay, or CRR is 3% of NDTL. So on the daily basis, 90% of the CRR has to be maintained, and on average, so on average, on the daily basis, 90% of CRR has to be maintained, and fortnightly 100%. So on average, 90% of CRR has to be maintained on the daily basis. So let's say 100% on some day, 110% on some day, 90% on some day. So on average, on the fortnight, it should be 100% of CRR. So on the daily basis, at least minimum of 90%. So on the daily basis, minimum of 90%. This is the average CRR that has to be maintained, so that on average fortnightly basis 100% of CRR is there. Okay, so minimum of 90% of CRR on the daily basis, and on average on the fortnightly basis 100% of CRR should be there. Standalone primary dealers will have the access to SDF, repo operations and such. Now, variable rate repo auction. So these are the auctions where the bids can be given by the bank to take more loan, and the bids should be at or below the repo rate. Okay, so in the repo rate variable repo rate means this is the changing repo rate, okay, at which the RBI is lending more. So this lending that happens by the RBI, it is at or below the repo rate. The bid should be at or below the repo rate. While variable rate reverse repo, this is the my bad. The bids at or below the repo rate will be rejected. So variable rate repo, this is the facility at which the RBI is lending more to the banks. So RBI can lend under the variable rate repo, or under the variable repo facility. RBI is lending to the banks, and banks have to give a collateral to the RBI, but this is the variable repo, right? That means here the repo rate is variable and bids can be given by the banks. Okay, now the bids should be more than the repo rate. The bid should be more than the repo rate. That is the fixed repo rate. Currently the repo rate is, let's say, 6.5%. Okay, so whatever is the fixed repo rate, the bid should be above the fixed repo rate. Bids at or below the repo rate will be rejected. Okay, and variable rate reverse repo rate, here the RBI is taking the deposits. At the variable rate, the RBI is taking the deposits from the banks. Here in this case, the bids, because the rate is variable, so the bids should be at or above the repo rate. This will be rejected. The bid should be below, because the RBI is taking the deposit, so RBI will be taking the deposit below the lending rate. Repo rate is the lending rate. So RBI will be taking the deposits below the repo rate. Okay, so bids at or above the repo rate will be rejected. So this is the idea, that variable rate repo, where the RBI is lending more to the banks. So in this case, the bids that has to be given by the bank should be higher than the repo rate. Okay, bids at or below the repo rate will be rejected. And in the case of variable rate reverse repo, where the RBI is taking more deposits from the banks, in this variable rate, the bids that should be given by the bank should be below the repo rate, because the deposit rate should be below the lending rate. So bids at or above the repo rate will be rejected under the variable rate repo, reverse repo. Now coming to the next question, that is under the recently updated export compliance rules, exporters who route their proceeds through bank accounts in an IFSC. So basically the exporters, they are getting the money from the importers. Okay, so exporters of India, they are getting the money from the importers in US, Europe and the other countries. Okay, so the exporters, they usually have foreign currency account to get this money from the customers. Okay, so in the foreign currency account, they are keeping exporters are keeping the dollars, or they are keeping the euro that they are later on bringing back to India. The exporters of India are bringing back to India. Now it has been said that in the IFSC also the foreign currency accounts can be maintained. Okay, foreign currency accounts to hold the foreign exchange, to hold the export proceeds, to hold the money. The foreign currency account can be maintained in IFSC, and the money has to be brought back from the IFSC within 90 days. Okay, within 90 days. So this you have to remember. C is the answer here. So basically, if the exporter is maintaining the foreign currency account means an account that holds the foreign currency, that is the currency other than the Indian rupees, Nepalese and the Bhutanese currency. Okay, so foreign currency account hold the foreign currencies such as dollar, euro, pound sterling, Japanese yen and such. So foreign currency account, it has to be maintained outside India, because the foreign currency is being kept in this foreign currency account. Okay, now in the IFSC also, that is International Financial Service Center, that is considered the international domain for the financial transactions. Even if the IFSC, we have the IFSC where Can anyone tell me that in India, where do we have the IFSC? We have the IFSC in Gujarat, right? In the gift city. So even if we have the IFSC in India, in Gujarat, still, even if we have the IFSC in India, it is considered, the IFSC is considered the international domain. It is considered the financial platform, okay? It is considered the international financial platform. So financial transactions can take place in this IFSC that is considered the international financial transactions, okay? So basically the foreign currency account can be maintained in the IFSC and the money has to be brought back from the foreign currency account within 3 months from the IFSC, from the foreign currency account. While if the foreign currency account is maintained in the foreign jurisdiction, in any other foreign jurisdiction, so from the foreign currency account, the money has to be brought by next month from all the other jurisdictions, okay? This is the idea. Now try to answer this question. As per the 2025 amendment to the FEMA, borrowing and lending regulations, Indian authorized dealer banks are now allowed to extend INR denominated trade credit to residents of select neighboring countries. So basically it has been said that the INR denominated loan can be given to the residents of neighboring nations. So which countries are covered under this updated permission? The borrowing and lending can happen in rupees. The borrowing and lending can happen in rupees to which of the neighboring nations? So Bhutan, Nepal and Sri Lanka. These are the 3 neighboring countries, okay? So 1, 3 and 5, that is D is the answer. So basically it has been said that the borrowing and lending can happen by the authorized dealer banks in India that are authorized to transact in the foreign currency. So authorized dealer bank can lend or they can borrow. They can lend to the residents. They can lend to residents. They can lend to the residents of Bhutan, Nepal and Sri Lanka. Okay, this is the idea. So authorized dealer bank may lend in Indian rupees. In Indian rupees to person resident outside India, being a resident in Bhutan, Nepal or Sri Lanka, including a bank in these jurisdictions for cross-border trade transactions. This is the idea. Got it? Any confusion here? Repatriation required within 90 days. From the IFSC, the money has to be brought back within 3 months. Within 3 months means 90 days. The money has to be brought back within 90 days. Okay. So the repatriation should happen within 3 months, that is within 90 days. While from the other jurisdictions, this is from the IFSC. From the other jurisdictions, the repatriation should happen. The money should be brought back to India by next month from when the money has been received. Okay. Now here it has been said that the authorized dealer banks, the authorized dealer bank may lend in Indian rupees. They can lend in Indian rupees. The banks in India that are authorized to do the foreign exchange transaction, they can lend in Indian rupees to the residents in Bhutan, Nepal and Sri Lanka if these residents require money for doing the trade with India. Now coming to the next question, try to answer this question. Which of the following correctly lists the 3 official problem statements? So Harbinger 2025 invites innovative solutions under specific problem statements aligned with the theme secure banking powered by identity, integrity and inclusivity. So this is the theme of the Harbinger 2025, which is very, very important. Now in this Harbinger 2025, there are 3 problem statements that have been given on which the solutions have been invited. Okay. So the 3 problem statements are what? Tokenized KYC, tokenized know your customer, offline CBDC and enhancing trust. Tokenized KYC so that the KYC can be transferred from one entity to another in the tokenized manner so that the information can be transferred from one entity to another so that again and again the KYC is not required. Okay. Offline CBDC because we want the physical cash to be used interchangeably with the central bank digital currency. So we want central bank digital currency to be used in the offline manner, just like cash. For cash transaction, for the money transaction, we don't use any internet, we don't need any mobile connectivity. Similarly, for the CBDC also, there should be no mobile network or connectivity that should be required if we want it to be used interchangeably as cash. Okay. Enhancing trust, customer security has to be enhanced and the security of the digital ecosystem has to be enhanced. Okay. So these are the 3 problem statements on which the solution is invited. So this is Harbinger 2025. These are the 3 problem statements on which the solution is invited. Next, coming to the next question, try to answer this question. The 30th meeting of RBI Standing Advisory Committee to review MSME credit flow was chaired by which official? So basically, the 30th meeting has happened. The 30th meeting of the RBI Standing Advisory Committee. This is going to review the MSME credit flow. This was chaired by which official? So it was chaired by Sri Swaminathan Ji. Okay. Not very important, just the basic idea required, that the 30th meeting happened of the Standing Advisory Committee that reviewed the flow of credit to the MSMEs, and the chairperson was Sri Swaminathan J. Recently, it has been communicated that VFS Capital Limited, that had previously given the application to become the small finance bank, has withdrawn its application. Okay. Now coming to the next question, this is very important article that you must know about the free AI. So try to answer this question. So in order to further the responsible innovation in AI and to have the AI models being used in the financial segment of our country, so that the cost effectiveness can be brought and the AI can be used for the betterment of the services and such. So in order to further responsible innovation in AI, the RBI constituted a committee, Free AI Committee. Okay. Now the Free AI Committee has recently provided its report to RBI. Which of the following statements are correct in regards to the report? So the Free AI Committee was chaired by Dr. Pushpak Bhattacharya and submitted 7 key sutras. This is correct, right? Read the statements and try to answer the question. Under innovation enablement, so there are 26 recommendations. Okay, there are 6 pillars. There are 6 pillars that are divided into 2 categories: innovation and risk mitigation. So for the innovation, there is infrastructure, policy, capacity. For the risk mitigation, for reducing the risk, because in the AI domain we have to do the innovation, but we have to do the risk mitigation also. We have to reduce the risk. So for risk mitigation, there is governance, protection, and assurance that is required. Okay. So under innovation enablement, there are 3 pillars, that is infrastructure, policy, and capacity. Under the risk mitigation, there are another 3 pillars, that is governance, protection, and assurance. Under the 6 pillars, the report outlines 26 recommendations for AI adoption. That is correct. So first and third were correct, second was wrong, and that's why the answer is C here. Okay. Now, this is a very important report that you must know about. We have discussed it again and again in the different marathon sessions. A question from this report has come in your phase 1 also. So Free AI Committee report, it is the framework for responsible and ethical enablement of artificial intelligence. In this, there are 7 sutras. Trust is the foundation, people first, innovation over restraint, fairness and equity, accountability, understandable by design, safety, resilience, and sustainability. Any question that comes on AI, you can use this report. Okay, you can state some of the points from this report. Now there are 6 pillars that is mentioned in the report, that is divided into 2 categories: innovation, boosting the innovation, or risk mitigation. So in the innovation, there is infrastructure, there is also the there is infrastructure, policy, capacity. In the risk mitigation, there is the assurance, protection, and governance. Okay, innovation enablement, infrastructure, policy, and capacity; risk mitigation, governance, protection, and assurance. Now coming to the next question, try to answer this question. RBI has been publishing a composite Reserve Bank of India Digital Payment Index since January 1, 2021 to capture the extent of digitization of payments. So Digital Payment Index, it captures the digitization of payments, that how much digitization, the penetration of digital payments has happened. So which of the following statement is or are incorrect, that you have to tell. DPI for 2025, March 2025 stands at 493.22, correct, as against 465.33 for September 2024, correct. The RBI DPI has been constructed with March 2018 as the base period, and the base period has the value 100, that is correct. The increase in RBI DPI index was driven by significant growth in parameters, payment infrastructure supply side factor, and payment performance, not enabler. Okay, so this is wrong. So first and second statements are correct, but third is wrong, and that's why the answer here is B. So Digital Payment Index, it has 5 parameters, that is payment enablers, payment infrastructure demand side, payment infrastructure supply side, payment performance, consumer centricity. The highest weightage is of payment performance. Okay. Now the index value has improved from September 2024 to March 2025, and the improvement in value is because of payment infrastructure supply side factors as well as payment performance. Because of these 2 components, because of these 2 parameters, the value has improved. Okay. Now coming to the last second question. Try to answer this. So RBI has recently released Reserve Bank of India Investment in Alternative Investment Fund Directions. So the regulated entities under the RBI, they can invest in alternative investment fund, As per certain requirements or guidelines, no regulatory entity shall individually contribute more than what percentage of the corpus of AIF scheme, and collectively all regulatory entities in any AIF shall not contribute more than what. So here the answer is that no regulated entity shall individually contribute more than 10%, and collectively collectively all the entities should not invest more than 20% in the corpus of the AIF scheme. Okay, so the answer here is D. Chalo. Now coming to the last question. But after this, see, a recent report has released and I will discuss in brief with you that report. Okay, so I will take 5-10 minutes extra of yours to discuss that report, but first try to answer this question. So any GD and NESL have signed an MOU to enable the real-time digital execution of bank guarantees, reducing the processing time so that the bank guarantees can be provided in the real time in the faster manner. Which platform is being integrated with NESL's DDE system? So it is Entity Locker. Okay, so basically the NEGD's cloud-based document management platform, that is Entity Locker. This is an extension of the DigiLocker initiative, and there is NESL's digital document execution platform, so they have been linked. That is the idea. This is about NEGD and NESL that you can read briefly. Now RBI reconstitutes the committee of advisors. So basically RBI has imposed all-inclusive directions. That means heavy regulations, restrictions have been imposed on Irinjalakuda Town Cooperative Bank Limited. So Shri T.A. Mohammad Shagir, member of the Committee of Advisors, has expressed his inability to continue as the member due to personal reasons, and that's why the new members have been chosen. Not very important, just this was recently discussed, so I brought it here, but it is not very important. As well as compounding of contravention. See, basically under the Foreign Exchange Management Act, if there is any mistake, if there is any contravention that is happening, that means if there is any regulation that has been broken, but the case is not very extreme, or the case is not very serious, or this is the first time offense that has been done, so in this case the compounding can happen. That means by giving a fine, you can get out of that problem or that offense if you have done the first time offense, or if the offense has happened by mistake. Okay, so to streamline the receipts of the payment or the application fee and the compounding amount, the sum for which contravention is compounded, the sum for which the mistake is let go of, so there is some fees that has to be given, or some payment has to be given. So if you are giving that payment, if you are giving that fine, basically if you are giving the fine, your mistake can be overseen if you are the first time offender or the mistake has happened by mistake. Okay, so the sum for which a contravention is compounded and the application fee, this can be given through the NEFT and RTGS. Now this is the basic idea. Okay, now this is the homework question, but before ending the session, so you have to answer this question. This is the homework question. Which of the following correctly identifies one of the organizers of the Global Fintech Fest, that you have to tell. But before ending this session, let me show you that this is the recent report that the RBI has released on 1st of December. Now, because this report has been released on 1st of December, that's why it has very less chances of coming in your examination, because your exam is on 6th of December. But still, let me discuss with you some important points, because this integrated ombudsman scheme is very important, and maybe a static question might come. Okay, so basically integrated ombudsman scheme. So here in this report, at least I have marked some important points from the executive summary. Okay, so here you can see that the annual report of the ombudsman scheme. So the annual report has been released of the ombudsman scheme 2024-25 under the Reserve Bank integrated ombudsman scheme. Okay, so under the integrated ombudsman scheme, this is the scheme. So I hope you know about the integrated ombudsman scheme. This is the scheme under which, let's say, the bank is not resolving your complaint within 30 days, or the bank has not replied to you or your complaint within 30 days, or you are not happy with the reply of the bank that the bank has given against your complaint. So you can go to the integrated ombudsman scheme of the Reserve Bank of India with your complaint against the bank or against the other regulated entity. So basically under the integrated ombudsman scheme, the commercial banks, they are included regional rural banks, scheduled primary urban cooperative banks, non-scheduled primary urban cooperative banks that have the deposit size of 50 crore and above. So these banks if you have any complaint against these banks, first you will go to the bank. If they are not resolving your complaint within 30 days or they are not replying to you satisfactorily within 30 days, then you can go to integrated ombudsman scheme of RBI. Okay, if you have any complaint against NBFCs or they are not resolving your complaint satisfactorily, excluding housing finance companies, NBFCs that are authorized to accept deposits or they have the customer interface with an asset size of 100 crores and above, they are also included under this integrated ombudsman scheme. Or payment system participants, credit information companies, they're also included under the integrated ombudsman scheme. And remember that this annual report is for 2024-25 time period for this annual year or for this financial year. Okay, now basically it has been said that the complaints, under the Reserve Bank integrated ombudsman scheme, there is the increase in complaints by 13.55% over the previous year. Okay, now the complaints can be given through the CRPC, that is Central Receipt Processing Center. So through the Central Receipt and Processing Center, the complaints can be received by the integrated ombudsman scheme, or the RBI can receive the complaints through the CRPC or CMS. Okay. So the offices of the Reserve Bank of India Ombudsman, have received the complaints through the CMS portal, that is the direct portal of the RBI, where you can raise your complaints, or through the CRPC also you can send the complaint to the CRPC, Central Receipt and Processing Center. So centralized receipt and processing center, where you can send the complaints through email or through the physical mail also. Okay, so this is the center is in Chandigarh. So CRPC has received a lot of complaints. Some of the complaints were handled by CRPC center itself, and the rest of the complaints were sent to the offices of Reserve Bank of India Ombudsman. Okay, so basically under the integrated ombudsman scheme, the complaints mostly come from the CRPC or the CMS. CMS, if the complaint is coming through the CMS portal of the RBI, the complaint directly goes to the offices of Reserve Bank of India Ombudsman. If the complaint is going to the CRPC, CRPC handles some of the complaints itself. The other complaints, they are sent to the offices. Okay, so from the CRPC received nearly 9 lakh complaints, but only 1 lakh complaint were sent to the offices. Okay, from the CRPC, while from the CMS all the complaints were sent to the offices. Now rest you can read more. Okay, I have highlighted some of the important points. Out of the total complaints received at the offices, 91.22% of the complaints were lodged through digital mode using CMS portal or email. So of the total complaints that have been received by the offices, most of the complaints have gone through the digital mode using the CMS portal or email of the CRPC. Okay, as I've told you that in the CRPC, physical mail can be sent or the emails can also be sent. So through the email also the complaint has been sent. Complaints against the banks formed the largest portion of complaints, then the NBFCs and such. Among the banks, the share of complaints received against private sector banks was highest in this year. Now, offices of Reserve Bank of India, the offices of RBI Ombudsman, they have disposed most of the complaints. The disposal rate was 93.7%. Okay. Now the contact center, this is a toll-free facility. Let's say that I want to raise complaint. I have raised the complaint with the bank, but bank is not hearing my complaint. The 30 days have been passed. No reply have been received. I have received no reply from the bank against my complaint. So now I want to go to the Reserve Bank Integrated Ombudsman Scheme. I want to take the help of the Reserve Bank Integrated Ombudsman Scheme. I don't know about the CMS portal of the RBI. I don't know about the CRPC center, or I don't know how I can raise the complaints through these portals. So I can contact this contact center with a toll-free facility. Now this center provides me information and clarification that how I can use the mechanism of the RBI for raising my complaint. Okay. This contact center guides complainants in filing the complaints under the Reserve Bank of India Ombudsman. This is the idea. The contact center which is operating, now these contact centers, they are operating from Chandigarh, Kochi, Bhubaneswar, okay, and showing an increase of 28.989% over the previous year. Now out of all the calls that were received at the call center for the queries and for raising, like for clarification and information that how I can raise my complaint with the Reserve Bank Integrated Ombudsman Scheme, 60.64 complaints 60.64 calls were through the interactive voice response system. So basically contact center, it do not handle your complaints. It do not take your complaint. It is only the center through which you can get the information that how you can raise your complaints. This is the idea. Okay, so we have basically discussed that CRPC is the center. It is a centralized receipt and processing center where the complaints can be received in the form of email, in the form of physical mails and such, as well as CRPC receives the maximum of the complaints. Okay, it handles most of the complaints itself. Some of the complaints are sent further to the offices of Reserve Bank of India Ombudsman. The CMS portal, through the CMS portal also the complaints are raised by the complainants, and CMS portal, from this portal directly the complaints are sent. All the complaints are sent to the offices of Reserve Bank of India Ombudsman. Okay, so this is the idea. Now there is a contact center. If you want to get the clarification or the information that how the complaint can be raised, so the contact center is the center through which you can get the information that how the complaint can be raised. This is the idea. Okay, now other developments during the year that you can read, that what were the developments. Basically, thematic multimedia campaigns were run on grievance redressal and digital arrest scam were released. So thematic multimedia campaigns on grievance redressal and digital arrest scam, they were released in November 2024 and March 2025. 2 print campaigns were also done. Okay, way forward. So basically, review is happening of the Reserve Bank integrated ombudsman scheme, and the review is happening of the internal ombudsman also. Internal ombudsman, they are the ombudsman in the regulated entities. They are the internal complaint handlers in the regulated entities, in the banks, NBFCs and such. So that is the idea. So I will share this PDF, highlighted PDF also, so that you can get the important points, but I hope you have got the clarity about the basic idea of the report. Okay, now this report was released on 1st of December, so there is less chances of any question coming from this report, but at least you should know the most important points. Okay, so this is it. So here, this is the homework question. I hope you will be easily able to answer this question, and this is it for today. I hope everything was clear and this session has helped you, and this is it. Thank you very much. You will get the PDF by tomorrow 12 p.m. and you will get the PDF in the Telegram channel of EduTap. So thank you everyone. Thank you for joining. I hope you enjoyed the session, and do tell me that how many marks you have got out of 46. Out of 46, how much marks you have got. I have brought most of the questions from RBI notifications and press releases, but some of the questions I have also brought from finance current affairs. So this is it from my side. So thank you everyone. Thank you for joining. See you in the next session. And I hope you clear the phase 2, and we meet for your interview rounds. We meet for your when you get the selection. Okay, so all the very best for your examination. Do very good, and I hope you clear the phase 2 and you reach till the interview round, and then let's meet before the interview round, and I hope you clear the examination now. So thank you everyone. All the very best. Do well, and see you later. Thank you everyone. And in case